Hey, hello, hello. Welcome to this live, uh, this new episode number 11 of the Nearshoring team, chasing the deal. So as you can see, I have a new webcam here. So I like it. I really like it. I was using it to film my classes videos, but now I download a new software to run it as a webcam. So I really like it. Tell me how you think. Okay, so so I hope everything is okay. Please, if you don't hear me, please tell me. Uh, this episode is about Houston. Houston. The first episode was about contending Houston to Dallas and also with San Antonio, and the winner of that contest was Dallas. I'm in Dallas. I'm in Texas, but I really like Houston market, and here I'm gonna tell you why I like Houston market. Because if you don't follow me on Instagram, you must follow me because I say other things that I don't say either in LinkedIn or YouTube. And recently, I post a reel on Instagram where I say I feel something about the new stable coins, the new U.S. stable coins that the new government, the Donald Trump government, is going to has this huge plan to strong the U.S. dollar. Uh, and they plan to sell actually the Venezuelan oil. Actually, he just told that he's planning to hire some companies, some big oil companies in the U.S. to extract all that oil from Venezuela, and then that oil for sure they will sell it to other countries. But what Donald Trump don't he doesn't say uh, it's how he will sell that oil, that Venezuelan oil. So what he plans to do is to, last year 2025, the government Donald Trump signed a new act called the Genius Act. Okay, so what's about the Genius Act? The Genius Act, it's a law to back US debt and US dollar, excuse me, to back cryptocurrencies, stable coin cryptocurrencies with US dollars. So basically, they are mixing up uh, the blockchain with the US dollar. So everyone, maybe you have ever heard before Bitcoin. So if you heard about Bitcoin, Bitcoin is a cryptocurrency. It works in a technology called blockchain. So the thing about Bitcoin, you know, it's many things may get mad what I'm gonna about to say, but Bitcoin is not a reserve of value. It's an speculative asset, because you are relying in what the other people it's willing to pay for that Bitcoin. Okay, so it's not like the dollar. Like the dollar, it's backed by the U.S. government, and every transaction the U.S. government asks for taxes, and when they ask for taxes, they ask for U.S. dollar. Okay, so the blockchain technology has one huge advantage, and it's decentralized. So if you want to send one payment of Bitcoin or any other cryptocurrency to any other person in other country, maybe you want to send a payment from the US to China. So right now, to do that, it will be very hard. It will be very hard because you have to rely on international banks and banks controlled by the US, and banks controlled by China. Okay, so with the blockchain, you can do it without that, without asking those centralized governments. Okay, you can send the Bitcoin to a citizen in China, and he can store the Bitcoin in a personal wallet that they call a cold wallet. Okay, so basically the blockchain technology can surpass every government. Okay, so what the government of the US is trying to do is all these citizens of other countries, included China and Russia, they purchase US dollars. So instead of having their savings in Chinese yuans or in Russian rubles, they will have their savings in US dollars because they don't have to ask the government anymore. So they will save their savings in US dollar, and these other countries, these other currencies will go down, will devaluate. Okay, and the US dollar will get stronger because the banks here in the US will have more savings, and with more savings they can print more money. And even better, the US government will back all that US dollar stable coins, not only with deposits in US banks with US dollars, but also with US government debt. Okay? So basically, the US government is trying to fix the printing machine and make it print like never before. Okay, so the dollar will get stronger. And what the Venezuelan oil comes in it, because if you ever heard about the petrodollar, that's arrangement the US government has with other governments, especially with Saudi Arabia, that they will sell all the oil, and then they will sell it for US dollars. And then those US dollars, they will invest back in US debt. So that supports the printing machine. Okay? But now with the Venezuelan oil, the US government, they don't need from other countries because they can sell the Venezuelan oil and they can ask for US stable coins, US dollar stable coins. So that's what they are trying to do. They are trying to sell the Venezuelan oil and then ask for US dollar stable coins. So that will that will make the US dollar stronger than never before. Okay, so what we are seeing right now in the US with high interest rates, we will see maybe at the end of the year or maybe in 2027, we will see all those rates get compressed, get down. And then we will see the commercial properties when the federal rate goes down, the cap rate in commercial properties goes down, also compresses. So that means we will see the properties values go up and every other assets will go up in US dollar. So that's what I really like the Houston market, because Houston market, all these big companies that will go to Venezuela and extract that oil will be, most of them will be from Houston. They are headquartered in Houston and they are headquartered in Texas. And the Venezuelan infrastructure needs a lot of fixing, needs a lot of repair. So all these companies that sell services to oil companies are also in Houston, like Schlumberger and other big companies. They are in Houston, and they will go to Venezuela, fix all those oil infrastructure, so the US government can sell the Venezuelan oil, and basically the Houston market will explode. This is the first market that will feel the boom of stable coins. So that's what I like this market. So What I'm gonna teach you now, I'm gonna show you my software I use every time. I really like this software. For those of you that that never watched me before, never watched a live here, this is called CoStar. This is I think it's the best software out there, the best property intelligence software. And here, as a real estate agent and as a real estate investor and developer, I can see all the market data. Okay, all the market data. This software has their own people, their own employees. They are calling to the brokers and to title companies, and they are finding all these numbers. Like you see, the inventory Houston, it's 86, almost 900 million square foot inventory, and it went up from a year ago. Why? Because the developers are building new buildings all the way, and they are. We can see it also here. They they passed from last year almost 19 million square feet, from current year, from this year, almost 29 million square feet under construction. And the net absorption, it dropped a lot, a little bit from a year ago, but basically because the developers are expecting this. I'm not the only one thinking about this, and they are building a lot of square foot of industrial infrastructure, and that's why the absorption dropped, because they build uh, new square foot, new construction. Okay, so the vacancy, we can see the vacancy went up a little bit. Okay, because again, because they are building a lot of infrastructure, they are expecting, developers are not full, they are expecting something big, so they are investing right now. Okay, so for the investor that it's not very experienced, they may say it's not a good market because vacancy rate are going up. That's not totally true, because they are building a lot, they are expecting the growth. Okay, so we can see, for example, even if the vacancy rates went up, we can see the we can see the market asking rate went up also, like 4%. I think it's one of the biggest numbers in the US on the market rent growth. So we can see also the market rent went up from 103 to 110 dollars per square feet, and we can start see compression on the cap rate here. We went 7.83 last year to 7.74 this last year, 2025. So we can see some numbers that give us an idea that the market is hitting. Okay, so for example, or the investors and developers are expecting something because they are building a lot. Okay, here we can see a summary of the market, and as we can see, Houston, what I read before, I cannot see here where it says, but what I find before, it's that we are starting to see similar rents on newer assets than on older assets, older warehouses and manufacturing buildings. Why? Because they are building a lot. They are building a lot. In some parts of Houston, they have on newer assets, newer buildings, industrial buildings, they have 50% vacancy on newer. Why? Because they built a lot, okay, expecting that growth. They are waiting for the right moment to list them, okay? So what we can do here, since since we are expecting some growth because of that, all those companies, um, all services companies uh, in Houston, then, and we are seeing similar rents on the newer assets than older buildings, then the tenants from older buildings are moving to newer buildings. But this is only on big buildings, more than 100,000 square feet. So what we can do here is invest on some of those newer buildings that has a high vacancy rates, okay, mostly close to the port, because these companies operate close to the port, and that's where they have the largest numbers on the vacancies. So I see an opportunity here, okay, acquiring those assets close to the port. So let me see. Also, we can see here, we may note here another trend, okay? Since last Houston is the second city with the largest population growth in the last 10 years, and we see here uh, over the just the three last year, they added almost 500,000 new residents. And this is good because of two things. We have more workforce here, blue collar jobs. So we can, this is a good place to manufacture or to give all services, cheaper services here. Okay, that's one. And on the other thing, we are seeing also a moving trend on the population, but we are seeing wealthier population moving in, mostly to the woodlands in that area. Why? Because we are seeing many problems in Latin America, and these people are, most of them, they are from Mexico. They are wealthy Mexicans that are moving because of some, the Mexican government. It's not very, I would say, it's not going very well with the last reforms, law reforms, and things are not with the insecurity in Mexico. So these wealth people are moving to, and basically they are moving to Houston. Some of them are moving to Dallas or San Antonio, but most of them are moving to Houston, because in Houston there is a very strong uh, Mexican or Latin population, and they are moving where their parents or their relatives are. Okay, so that's another thing that can help us. But I will say this is more for the flex buildings, because in the flex buildings they are more like small service companies that they service, like construction or other kind of things that helps with when this kind of population moves in. But also in the blue collar, because we have more workforce here. Okay, um, so let me show some numbers. Marking asking rent, 9.45. National, it's 12. Okay, but it's going up 4%, as I told you. Vacancy, you see vacancy national. It's over the Houston market, so that's not that bad. It's not that bad. Uh, Available months of market 6.8, almost 7. National 7.4. Inventory went up. Average building square feet went up. That means we are focusing on bigger companies, because oil services companies are usually big. They don't need buildings under 100,000 square feet. Okay, let me see. Okay, demand. Okay, let me show you some numbers. Demand, net absorption went down a little bit down because again because of the construction. Okay, we have to learn to read between the lines because some of these numbers most investors get scared. Okay, but you have to invest when everyone is scared. I told you before. uh what's the I like this phrase. I repeat many times from Warren Buffett. Fear, be greedy when everyone is fear, and be fear when everyone is greedy. That's what a good investor, uh that's how a good investor acts, you know. It's contrarian. That's where the money is. Okay, so net absorption went down from the last year, we can see. Okay, a little bit. Market asking rent, we are seeing this is a good thing because we are, even if the vacancy went up, we are seeing growth on the rents, so that means something. Okay, market asking rent 9 por market asking rent all-time high. Okay, $9.5 all-time high. Okay, market sale price per square feet all-time high again. Okay, cap rate compressing. Okay, leasing activity. Let me see. Okay, that's what I told you before. Another factor driving this flight to quality is the sharp rise in rents in recent years. Brokers know that as rents have surged, the gap between older and newer properties has narrowed, prompting tenants to upgrade to higher quality space. So why will someone invest in older assets if the rents are similar and tenants are moving from older assets to newer assets? And also, if the vacancies in the newer assets are high, there's no thing to think. You know, you go to the newer assets and you negotiate. You drop a low ball with those developers that have high vacancies. Okay, because they have to pay construction loans. You know, they have vacancies, they have costs, so they are burning. You know, because they have to pay. Every developer use debt. They don't have they Yeah, I don't know any developer that pay cash for the construction. So they usually use construction lending. So they have debt, baby. So you have to drop a low ball and negotiate with these developers. Okay, with these new assets, new absorption, um, vacancy in the U.S., net absorption, steady, leasing activity. Okay, vacancy, steady. Okay, again, you can see here the vacancies. Well, this is not usual because usually the vacancies on the flex spaces are lower. Okay, but this in Houston, they are higher than for example logistics or specialized. Again, you see what I see, what I say. We have the lower vacancies here in the specialized. Specialized, it's in other words manufacturing buildings. Okay, so we have in the first quarter 2026 we have a vacancy on specialized of 3%. Excuse me, yeah, 3%, 2.9, 2.8. Okay, so the lowest on all those types of assets. daily vacancies, availability. Okay. Vacancies and asking rent we can see growing right now, 9.5. Months on market 7.6. It's the a little bit above the national average. Months to lease a little bit under the national average. Vacant probability of leasing 50% probable that we lease out one building in 5 months. Okay. Market asking rent, construction. Here's what I told you. Supply side pressure is small, most significant in the big box segment, which accounts for the majority of recent deliveries. Okay, so we go to the biggest one because those are where the higher vacancies are. Okay, vacant space in buildings over 100,000 square feet and larger now totals roughly 26 million square feet, about 10 million square feet more than in late 2019. Okay, another 12 million of leased big box product is under construction. Okay, brokers note that demand remains solid for smaller big box buildings, while larger ones are sitting on the market longer. Okay, CoStar data reflects this trend. Spaces above 250K square feet now take about 10 months to lease, nearly double the turnaround time 2 years ago. Properties between 100,000 and 200,000 square feet are taking around 6 months versus 4 months previously. So we may go to look for some properties in this range, okay, 100 to 200K, because if we rent it to one tenant, it will be easier. We will take around 6 months. Otherwise, if we go for buildings over 250K, we will take more than 10 months. 10 months if we lease to one tenant, or we can subdivide the space and rent to multiple tenants. But anyway, um, it will get longer for the biggest the bigger the building is, it will get longer. So I think a good idea is to look for 100 to 200K square feet. Okay, sale price, market cap rate, economy, labor market. Okay, net employment, you can see the employment steady, median household income growing, population growing 1%, net population change growing, originations balance, loan to value steady, origination DSCR, interest rate. Okay, let me see only the buyer types. Okay, the types of buyers that acquiring assets here. Institutional 50%, private 22, seller private 42, institutional 30%. Okay, so now I show you the market numbers. So I want to show you now the properties so what we are going to do, it's a core strategy. It's called a core strategy. We don't want to upgrade the facilities, the building. We don't want to build a new building because we have other developers building a lot of space. And if we build something new, we will last maybe 2 to 3 years to build something new and to lease it up. Okay, so maybe we missed the opportunity of this growth on the oil services industry. We have to act now, because as I told you, this we are going to see this thing growing at the end of this year, or the second half, or maybe the first half of 2027. That's when we are going to start watching all this explosion with the stable coins on and the Venezuelan oil. Okay, so if we build new things, we will miss that opportunity. So we have to act now. So what we will purchase, all buildings or new buildings? We already see that new building rent is almost the same as the old building. Okay, and we already see that the vacancy on the newer buildings close to the port, it's almost 50%. Okay, so there's no reason we purchase an old building. We want to purchase a new building. Okay, a new building, and then lease it up, and then hold it maybe 5 years or 3 years until the rates go down, the cap rates compress, and then we sell the building, and we have a ton of profit. Okay, so let me show you for sales. Okay, what do you think about my new camera, guys? You think I'm handsome? I know I'm not, but just give me good words. Okay, let me for sale. Let me find some for sale buildings in Houston, guys. Houston, okay. Okay, for sale in Houston. So what property type we are looking for? Industrial. This time we are not looking for flex, because remember, flex, it's mostly to small buildings, for small businesses, and some big companies, maybe research or something, but we don't think the market here is for research. So we are targeting industrial, and we are targeting basically manufacturing buildings. Okay, so we property size we are targeting 100K to 200K. Okay, and we are looking for newer buildings, so the building must be built, must be existing, and must be built at least, let's say, 2023. Okay, 2023, that's a new building. Okay, wow, we don't have a lot, man. We don't have a lot for sale. Okay, let me see. Well, if I filter for existing, it will be I will have only 10 buildings. But if I also choose under construction, it will be more. So I will just deselect this. Maybe they will have the building in the next 6 months or something like that. Okay, so they are pre-selling. So let's just open this filter and let's find newer buildings where we want something close to the port. Remember, because here is where we have the biggest vacancies. Okay, in the area of Baytown, here is where we see the biggest vacancies. So, and also these oil services companies, again, they need the port, because they are, for example, they are manufacturing beer pieces for the oil industry. okay, like pieces, like big equipment for the oil companies, you know. So they need the port so they can export this big, massive equipment to Venezuela, or where the oil platforms are located. Okay, so we need to be close to the port. So let me see here. We have this one, 171 distribution proposed. Um, okay. They say distribution, but most of this building they just classify a distribution, but they work for manufacturing, because the only difference between a warehouse or distribution building and a manufacturing, it's maybe the power, the infrastructure for the power, you know, because they need good electricity infrastructure in order to manufacture these things. But most of these newer buildings, they work for manufacturing and warehouses as well. So we just choose this. For example, let me see. I think these three are good. So we have this close to the port in this area, and we have all along the highway, Interstate 10. So let's open the poll so you can vote for the first, the one you want me to analyze. So let's choose. Let me select this one. Select this one, then select this one, and this last one. This last one has 107, more than 1 year on the market. Okay. So we have these three options, guys. 15,600 Carpenter Logistics Drive. We have this big building, massive building, 171,000 building, square foot building. Then we have, this is 15,600 Carpenter. So the second building we have the option to acquire, it's 1403 Thompson Park Drive. Okay, it's 130k 130k square foot, built on 2023. Okay, this is the second option, 1403 Thompson Park. Okay, and then lastly we have the I-10 Eastern Slowlander. I don't know how to pronounce that. But this is the third option, 120k. Okay, so let's open the poll, and you can comment on YouTube, on LinkedIn, and you can tell me what you want, what building you want me to analyze, or to make an offer, a fictitious offer. I will not purchase this one for sure. Okay, well, if you want me, you can join my investor club, and we can make a syndication. Okay, I will leave you my link on the description for my investor. Okay, or you can visit my website. It's the nearshoringguide.com, and then you click on the investor club. That way we always find these kind of investments, and we syndicate them and invest on them. Okay, so again, first one, 15,600 Carpenters. Okay, 171k square feet. Okay, neither of one has a price disclosed. Okay, then the second option, 1403 Thompson Park, 130 square feet distribution. And the last one, the smallest one, it's I-10 East and Solander Road, 120 Okay, square feet. Okay. Okay. Let me see. Okay. Okay, so I think we have a winner here. So we are going to analyze 15,600 carpenter, this building, over a year on the market. So let's jump into it. Okay. Actually, build 2026, you see, so that is a pre-sale. A pre-sale. So that means maybe it's very probable that the building is vacant, because in this area vacancies are high unless they pre-list it. They pre-list. Okay. So if this is vacant building, we can negotiate further. Okay. And another tip, guys, if you purchase a vacant building, okay, you may be very sure that you have a well-connected real estate agent. Okay, because if you purchase a vacant building, you will need something like a bridge loan, okay, to purchase the building because it's vacant. So bridge loans interest rates are higher, so you will be paying interest when you look for the tenant to fill the vacancies. Okay, so if your real estate agent is well connected, he just send emails to their connections. He will be already connected to big companies, and he will send emails to these connections, and it's probable they will help you to fill the vacancies earlier instead of listing on the market and wait for the tenants to come in. Okay, so that's a good thing you have to do. Okay, so here we can see time on the market over 1 year. Okay. Rental building area 171. Taxes 1.05 per square feet. And also, if you purchase a vacant property, usually you pay less than a cash flowing property. Okay, because the cap rate can be higher than a property that it's already rented out and cash flowing, because your risk it's higher, and also the net operating income maybe for the first year maybe will be negative. Okay, because you will be paying the many expenses. Okay, let me see what says about the property. I want to see how many doors it has. Doors are important. It's important information, because the more doors, the more you can subdivide the property. Okay, and this is more important for logistics than this is another difference between logistics and manufacturing. Usually, logistic tenants ask for more doors because they want their assets, their stuff to go out quickly. Okay, go out and go in. Okay, and manufacturing, maybe they have one or two doors for product in, and maybe one or two doors for product out. Okay, because they are most interested in the production line. Okay, but if you have both, if you have a building with many doors, you can rent it out to logistics companies and manufacturing companies as well. So it's better, the more doors the better. Okay, and also for manufacturing you have to you have to watch out the strength of the soil of the slab, because many equipments will be going in and out on inside the plant. Okay, origination. Okay, I don't see the doors documents. Okay, I'm on the property list. Property. Okay, I'm gonna open the brochure, marketing brochure flyer. I don't think you can see the brochure, but let me see if you can see the brochure. Oh, let me see. Oh, I'm trying to share you the brochure, but you only see the. Let me see. I don't want to mess it. Okay. Place. Okay, replace. Okay, inbox for sale. Okay, no, you don't see the brochure, right? Um, Marketing brochure, this one. Yeah, I think you can see it now. Okay, this the brochure. It's the one you when you list the property uh, as a real estate agent. The first thing you have to prepare is this one when where all the information on the property is. Okay, so we have a cross dock. It is divisible. It says cross dock. It's I think this is maybe it's not feasible for manufacturing because cross dock it's usually they are not as wide as manufacturing building because they have one door in this side and then one door in front of it. So they have a truck uh, with uh, with the product going in and then transfer to to a new truck. Okay, but let me see side plan. Well, as you can see, this is the side plan, public detention. Okay, you can see here the door here, and then you have a door in front of. Okay, so well, but it can work for manufacturing for sure. It can work because let me see, 580 feet. I think it's a good it's a good length. Okay, so you can have a logistics building here, so the truck comes in and then you have another truck here and comes out with the product, or you can have a production line here where you have the product moving in here and then you have here the production line. Usually it goes like a snake here to, or maybe you have a production line like this way. Okay, and then the product goes out. Okay, So you have a lot of gates: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. I think it's 22 doors, 40 feet, 40 feet clearance. It's good for most of manufacturing needs. Also for manufacturing, one thing that it's important, it's the columns, the separation on the columns. I don't see the separation on the columns here, but the less columns you have, the better, because you can walk with equipment and everything, and you don't have any risk of hitting one column. Okay. Column spacing. Oh, I see the column spacing 50 by 50, 60 by 60 almost. Okay, so that's good. It's not like very crowded space. Okay, car stalls, structural frames, 8 inches reinforced slab. Oh, maybe it's a little bit. Uh, it's not as thick as I would want, but we have to ask for the resistance, for the, I think it's the rupture model. That's the number you have to ask. Okay, so you can drive with equipment all around the facilities. Drive 4 driving ramps. Okay, driving ramps. Usually bays are better for this kind of companies, that driving ramps, but some special equipments, uh, like cranes or something, for this kind of very specialized assets, it's you have to have some drive-ins so you can get in with those uh, specialized equipments. Through course, lighting, roof, sprinkler, has sprinklers. Okay, so I think it would be a good fit for manufacturing. The only thing I'm a little bit concerned is the lab. I would like maybe 10, 12 inches would be better, but we have to ask them or the structural engineer if we can, if this is something we can use. Electrical service, expandable, that's good, that we can expand maybe with more transformers here. Let me show you again the other. Replace. Okay, so again, so lease. So space available for lease, it's 171. So that means it's vacant, guys. It's vacant. Okay. Because they are still leasing, trying to lease this one. Okay. You see, we can see prices close to here. 285 last year, 1 year ago. It's 5 miles from here. Okay, so that means if we go by the price per square feet for this for these kind of properties, let me multiply because this property it's also new. So if we go by this number, it's 285 by 285 by 171 373. So almost 49 million. Okay, so if we go with the cap rate, let me see analytics. Okay, 5-star market cap rate 7.2 cap rate. Okay, is the rent market asking rent 7.7. Okay, so let's multiply 7.68 by 171 373 by, let's multiply by the vacancy, because we have a vacancy of at least 10%. So let's say we have it 90% of the time rented. So I multiply by 90%. Okay. Okay, by 12 months. And then we divide by the cap rate 7.2. So 200 million. So let me see. Sales comps. Let me do it again. So 7.68 by okay, I'm sorry. I made a mistake because I multiplied this by 12 and this is the annual. So this is, it's not multiplied by 12 because it's already annual. Okay, so if we go by the cap rate with these numbers, with a 90% vacancy here, with this cap rate, we get to 16 million. If we go to the with this number, okay, with comparable sales, we go to, I think it was 45 million. Okay, so 48 million. So it is 3 times. So we have to know what why they pay more for that building. Maybe it was a building already cash flowing, or maybe it was, I don't know why they pay so much. But maybe let's say not 16 million, but maybe we may pay 20 to 25 million. I think that will be a good offer to make. Okay, according to the analytics, maybe this cap rate is too high, because this cap rate is for the submarket. It's 3 to 5 star. I don't know. It has, um, well, it's 3 to 5. Yeah, it may be 5 star here. So if we have a new asset, maybe this cap rate may go lower. But since it's still vacant, um, I will not go too much lower. So I would think 20. Well, we need further analysis on here, but I will say 20 to 25 million dollars offer would be a good offer here, especially when the vacancies here in this area, it's as the market report says, it's around 50% on this on these big buildings over 100K, between 100K and 200K. So I think we may negotiate something around 20 to 25 million dollars. Okay, so what do you think? What would you do? Do you believe this trend of the stable coins and all this Venezuelan oil and a boom on the on the US dollar? Do you think Houston market will go up, will go down? I would like to know your comments in my YouTube channel, or maybe in the LinkedIn, or maybe if you are watching in TikTok. I know you guys in TikTok, you just watch me like 15 seconds and then go watch some kind of funny stuff. But maybe someone it's more than 15 seconds, and they are still here watching me. But anyway, what do you think about? Leave it on the comments. Let's discuss this. I would like you to more. If you watch me again, I would like you to comment here on the live, so we can comment more things. Maybe you have a question about some property, about some market. Maybe you are trying to purchase some property right now in other market. So I will be very happy to help you. So comment on my channels on YouTube, on follow me on Instagram also, and subscribe to my YouTube channel, to my Instagram. And if you want me to help you to buy a property, especially an industrial property or maybe an office property, I'm a real estate agent specializing in industrial property. So reach me out. Go to my website. I will leave you my website link on the description, and you can go and just click on the contact section and you fill it up, and I will call you back for sure. And also, I have an investor club. If you don't have the money, maybe you are not a big fund or a big family office, and you just want to invest maybe over $20,000, you can do it. You can do it. I have an investor club. You also can find the link on the description, and you click on it and you can join. And when I find industrial syndication opportunity, you can invest from 20,000 K, and it's totally stress free, because I manage everything. Me and my team manage everything. We charge the rents, and we manage everything. We pay the taxes, everything. Okay, so link on my description, and follow me, like me, and see you on the next live. Thank you for watching.